Olamide, thank you so much for joining me today.
Absolutely. Thanks for having me.
I wanted to talk to you about the buzz behind asset-backed finance. Can you tell me more about what's going on in there?
Yeah, so asset-backed finance has taken on so many names over the years, anecdotes, asset-backed lending, asset-backed finance. But just speaking generically, it's about lending against certain assets, whether tangible or intangible, of a company, rather than lending against the broader corporate entity. Depending on who you ask, the number could be 6 trillion, 3 trillion, 9 trillion. But what's consistent across all this, messengers is that market has doubled. What's driving the buzz, right? It's because you have a perfect coming together of supply and demand. In terms of supply, you have persistent financing needs from middle market companies, infrastructure developers, asset-backed lenders that we're familiar with, and others. Then couple that with the fact that banks that historically lent to this company have retrenched. So there's a hole and Q's demand. So private lenders such as us have come in to fill that gap. Life insurance companies, PNC, pension accounts, even high net worth individuals. So when you combine just the massive supply with the huge demand, it's hard not to see this top line, topical, and everywhere. So I believe that's what's driving it.
I mean, that sounds fascinating. What do you think investors need to know before kind of delving into this market?
As debt investors, we have to look to the downside at all times. We should never get too excited because our best case is par recovery. So what do? Two things. You first have to do your rigorous fundamental credit analysis on the company, on the business. And when you understand that, you then do a second level of analysis on the collateral, on the assets that is pledged against, against your debt. So do you understand it? How many other lenders have claims to it? Has it been perfected? What do the liens look like? And I always say this, listen to your lawyers. You don't always want them in the room, but in this case, listen to your lawyers, because when there's a lot of money to lend, there's a lot of money to lose.
Yeah, definitely. And it sounds like there's a lot of risk then involved.
Yeah.
Compounding onto each other. Okay, so how does that then impact investment strategies, for example, for 2026 and beyond?
Look, I think we will continue to see more of the same in an accelerated fashion. So we'll continue to see, the issues that we've seen. We'll see a lot more from digitalization. So data centers, I'm sure you've heard it all around, AI, cell towers, fiber. We heard from infrastructure, so renewable gas plants. We heard from, again, physical assets that you can imagine, and intangibles like mining royalties, TV contracts, music royalties. And ultimately, we remain bullish on the asset class. We think 2026, we continue to remain robust for that industry from both demand and supply perspectives.
It sounds like there's a lot of opportunity there then.
Absolutely. You just have to do your work, be vigilant, and do rigorous underwriting.
Amazing. Olamide, thank you so much for joining me.
Thank you for having me.